Good morning. It's Wednesday. Welcome back to Forex Focus here on Tasty Live. It's Wednesday, but it's a short week.
Good morning, sir. Yes. So, what do you guys call what? Synthetic Thursday or
Synthetic Thursday.
Okay. Very
We don't
good.
say that to our bosses, but you know.
Look at you guys. You're absolutely amazing. It is. So Hump Day.
Yep.
We're past Hump Day now. So it's all.
Yeah, it doesn't
So for
feel like it.
you,
Yeah.
the reverie has already started.
Yes.
The debauchery.
Oh, yeah. Full
whatever.
swing.
Yeah.
Going to Moulin Rouge tonight.
Moulin Rouge. The show?
Yeah.
Is it? Where is it? Like at Broadway in Chicago? One of those
I think
theaters?
so. Yeah.
Okay.
Actually, I'm not certain, but yeah, it's got to be.
Very good.
Yeah, my roommate's cousin is in it.
Really?
Yeah.
Okay.
A dancer.
And are you going with the missus?
No, going with the roommates.
Oh, okay.
Yeah.
Very nice.
Comped tickets.
Oh, look at you.
So why not have a little Wednesday night at the theater?
There you go. Very nice.
Are you a theater aficionado yourself?
I do like to go. Yeah. So I don't go that often.
Is this a musical? It's got to be a musical.
It
Right?
is a musical. Yeah.
Should be
So,
good.
Yeah.
People
You
like
should
it.
enjoy it. I mean, even stuff you've seen before, it's great when it's live.
Right.
There's something special about that. So it's fun. Yeah. It'll be great. So good for you. Look at you with culture.
Yeah,
So
I try.
You're starting with Culture Wednesday night.
Mm-hmm.
When do you go out to the Cicero exotic dancing clubs? Is that Friday, Saturday? What do you?
It's not.
How does the debauchery curve
Yeah.
work for you?
It's always steep and it's always unexpected.
I would
but I
imagine.
can say with confidence it won't be Wednesday.
It won't
so
be
that's
Wednesday.
good.
Okay.
And you know, it's kind of Good Friday. Can you go out to those places on Good Friday? Is that bad taste? Is it especially bad, or maybe it swings the other way, a counterculture?
I mean, maybe that truly makes it Good Friday.
Exactly.
So.
Yeah, my mom's coming into town, so I'll see her.
Oh, she is. So
Yeah,
you got
see
plans
her.
for Easter or stuff?
Yeah, our cousins in Elmhurst that we usually go out to, they've been kind of ghosting us, so maybe we ruined Christmas. I don't know.
So when you do things like this, are you bringing the missus with you, or does the missus stay out of the family orbit?
Traditionally not, just because she has family as well.
Okay.
And they are.
And they're here?
Yeah.
Okay.
So there's not yet.
Because my we're doing Easter
Okay.
out by us, and my
Yeah.
daughter's bringing her new boy toy.
Okay.
So,
nice.
yeah, we'll give him the appropriate scare.
And this is the first time you've met him?
First time we've met him, yeah. So it'll be interesting.
That's fun.
Yeah, it will be.
Got
Seems like a nice guy.
The
So,
hard-hitting questions? Or do you just go silent? You just don't look at him? Don't...
But no, we're actually, my wife's always very sweet. And
Of that, I'm sure.
And, I mean, Sammy's always panicked because I always assign these guys random names.
Nice.
Nicknames. So, and she's like, you can't call him that. And I was like, don't worry. I can actually differentiate when he's here and
I
when
can
he's
read the room, yeah.
when he's not.
That's
so,
pretty funny.
But, yeah, so we'll do that.
Nice.
Yeah.
Should be a good time.
And we're, again, yeah, it'll be nice to have a little bit longer week. It's been a hectic week. Interesting. Yesterday, it's funny. It was a little bit slower pace.
Yeah.
But you look at the ranges, there were still big ranges. I mean, gosh, it was the fourth time down there for dollar Swiss. And it's funny because in November, December last year, we were like looking at, Euro traded actually 31 pips instead of the usual 26. That's a bigger range.
Man.
And every market is still, and it's nice. We saw both dollars selling early, a bounce back.
Right at the open.
Yeah.
Interesting.
And I don't know, well, again, yesterday afternoon, NVIDIA announced that they just were told by the government that they can't sell their new chips to China.
Hate when that happens.
So they knocked NVIDIA down, U.S. stocks down. Dollar selling started again. But now there was, and it continued throughout the evening, now there was some announcement, of course, unattributed from Bloomberg, saying that the Chinese want to meet and talk. But the U.S. has been very rude and should stop being rude. So I can imagine that's going to go over like Not really well.
Like new boy at Easter.
Yes, right. Like a new boy at Easter. Yes. So we'll see how that shakes out. But for FX traders, which is great, you're getting expanded ranges, which is good. You accept that. You're getting some back and forth, so you're able to, I look at cable at Sterling above 132. It's just,
wow.
It's rich for the range.
Let's go ahead and pull up the platform.
Yeah.
Check in on these prices, the changes so far today.
Gold, $80.
Yeah, holy smokes.
So
now over 3,300.
We got up to 132. Kind of hard stopped. Last week when the tariffs were first announced, they took that market down $220, down to $29.80. Turned towards the end of the week, irrespective of equities being up or down, plus 3%, down 3%. From 30, let's just call it from 3,000, went through the highs of 32 even, like it had never even stopped there previously, up to 33. We're at, where are we?
33.10.
33.10. We actually printed a high of 33.35 in futures earlier this morning before they announced, again, that China might talk. I think we're getting to this point where it's getting difficult because now they're talking about Apple got their exemption for their smartphones and their computers. Now they're talking about exemptions for the autos. We'll see how this all. It's difficult, and I think what you're seeing though is, and I think this chart is emblematic of it. We had a decent sell-off in there that was met with. Again, the best we could do is sell off from 131 to 128, which is 300 points we would have killed for 300 points in a couple of days.
Exactly.
We're getting it now, but we are going into equities down, but where the lows get nowhere near the lows. We didn't get anywhere near 126, which was the old resistance level.
Range.
We rallied from that. We put in new highs. And so market structure is still so, and this is sometimes hard for people to do, is get used to, God, I remember buying them at 121 and feeling, uncertain. How in the world can I buy 132 as well? You know what? There's all kinds of ways you can do that. You have to accept the price levels you're getting.
Right.
Now, what it's saying is that good news, bad news. Until there's much more clarity on tariffs, I think the dollar's going to have a tough time staging a substantial rally, which means sterling's going to rally, euro's probably going to continue to rally. We'll see. From a net point of view, and if you compress this up a little bit, Glenn, we've had a huge run.
Yeah.
It's 11 big figures, 1,100 pips. That is, again, 9% in 30 trading days. It's a huge move. So it's very hard sometimes to say, well, statistically, that's an outlier move.
Right.
Statistically, absolutely. But I think if you're the active day trader trading back and forth, you've got to accept that what's a reasonable pullback? It's not getting back to 125.
Exactly.
Can we do that? Yeah, over a couple of months, probably. I don't know. I guess when I say probably, I don't know. There's always that possibility. But I think you've got to accept the ranges you have. And these inflated ranges, you've got to reset where am I interested in being long, where am I interested in being short.
I agree. And I think looking at a chart like this and recent price action like this is a good reminder that for these markets that are currency pairs, one traded against the other, you tend to see different tape action than something like equities, or we're looking a lot at VIX, which can snap back and forth. This really is a two-sided market because it can go up just as fast as it can go down, because these currencies could be quoted one way or the other. To see something run up can have with this veracity can kind of trigger some emotional response, and if you're a momentum trader, think that it can't, that it has a ton of support and it can't revert back down, or the opposite is true. But since these are really two-sided markets, you can see sell-offs just as easily as you can see enhanced run-ups.
Absolutely, and it's a great point. And I think for the contrarian, we've seen moves where the best pullback you'll get a 500 point, we've had 1100 point, but you'll get a big run up, and the best you do is get a 30 pip pullback that lasts an hour. That's incredibly hard for the contrarian to time and take what many would argue, well, that's an unreasonable amount of profit versus the risk. I don't disagree with you. That makes contrarian trading or trading the extreme hard. Here, you're getting run-ups and solid 100 pip pullbacks. What you have to do is not be looking for a home run. These are so high, I'm going to look for 400 pips of pullback.
Right.
That's going to be tough to generate. You've got to set realistic expectations around that. If you do, you're getting both sides to trade all the way up on this.
Yeah, and one thing call out about yesterday that I kind of appreciated, you said it was a slower day, and while that's true, yesterday I think was an important day for someone like a FX trader to kind of poke around what these dollar markets are doing, because you saw a pretty tight range in the euro dollar, the most liquid and popular pair to trade here in the U.S. And around the world. And so you saw a pretty tight range here throughout the day, and that could have been discouraging for someone that just looks at this. But if you were able to poke around, you got some nice back and forth in something like in Australian dollar to the tune of more weight in terms of percentage change.
Right.
You saw
Kiwi too?
Kiwi too. Yeah, I mean, these have been much more relentless.
Really
kind of
solid
strength.
Chinese growth numbers out over, and I almost don't say that just because, and that hooks you back to the news cycle,
Right.
which you shouldn't do. Well, why did the good Chinese numbers work last month? I don't know. This is why we don't put too much credence on it.
Right.
The markets tend to selectively pick, or the talking heads tend to pick what they want to. Again, this move, I'll pull out this placard for the reason why. I think structurally what we're seeing is we've seen 5 incremental highs over the last, from the start of this week. And each pullback has been shallower than the previous pullback. So structure-wise, this continues to look good. Kiwi 59 even is its 200-day moving average. Again, and it's like, Pete, that's the only thing you mentioned. It's one of the few things I look at from a technical analysis point of view, but very constructive tape action here. It's worth. Look at the master there.
Yeah, so now it seems like we're above the 200 here. You're getting some kind of crosses with 20 and 50 day, but I mean, those are so hard to.
Long-term change in sentiment, possibly. Big run, absolutely. From 55 cents to 60 cents, we're talking about, coincidentally, right about that 9% level. So sterling up about 9%, Kiwi up 9% from its lows. Very different overall market structure. Cable at levels we haven't seen in a long time. Truly the higher end of a multi-year range. Kiwi, very early on in that journey of
but now
65 cents normalization. A little bit of rotation of the leaders. So let's take a look at Swiss, because this is for the faint of heart, because this is moving.
Yeah, here's the 15-minute chart, but the daily chart I feel like is really indicative, because one, this is a 10-year low, but really the last time we spent any time here was 2011. But look at all these daily candles getting above 82 and can't support it. So really sputtering here. Just inside this range now, where you see kind of this similar ranges in British pound, but continuing to drift. More positive here. At least if you're long, you've stopped a little bit and maybe been able to take some out on some of these ranges, but nothing nearly as supportive as tape action in the Australian dollar or New Zealand dollar.
Absolutely. And I think when you look at this, for the contrarian, this is awfully tough, because 83, 82.5 would have been interesting areas. And it kept, again, this is a daily, it kept moving that day without a lot. But if you go back to, let's just pick an hourly here, that, even though it looks like, well, they're just stuck right at the low end of the range, there is some solid back and forth here.
Yeah.
When you look at this is 100 pips. And Frank mentioned this too. What you want is a market that gives you a lot of unique price points. And that's stating the obvious. I mean, a bigger range gives you more price points, but that gives you more opportunity to layer in positions, whether you want to be, okay, I'm going to set up for that this market cannot stage a rebound. We go through 81 cents. There's probably some elasticity to it and it trends lower, or that this has been tested 6 times now and it hasn't been able to go.
Right.
Agreed. There's a setup here for the contrarian or the momentum guy here, depending on what you want to play, which is great. But when we look at this, again, we're looking at this congestion range is almost 200 pips. It's 180 pips. That's a lot. So you've got to widen out your expectations a little bit. How do I do that? I trade smaller.
Exactly.
Because this is slippery. Liquidity in here, everybody does their best. One of the things we like to do is present very competitive pricing. But liquidity consistently remains pretty good in here, considering how slippery this can be in terms of momentum. So if you haven't traded Swiss and you're looking for something that has a little bit more elasticity, this is absolutely the time. But more than anything, and it's funny because I started my very first day trading Swiss, and that was where the cowboys would go in the pits. And right next to the Swiss was the D-Mark, which had a beta of about 0.2 against the Swiss. And I'm standing in the Swiss, and I'm watching these guys throw around 100 lots, and this market rip. An older guy taps me on the shoulder, and again, I was 20 years old, and goes, son, that might be a better place to start, which was the best advice in the world. It was just, it moves really quickly. So given that, if you're willing to accept that I'm going to make this determination about management, I'm going to manage for good and for bad, losers and winners, and you're going to have to stick to that and be aggressive in the way you manage that and reach. You can't, okay, it's gotten to my level, I'm going to put a sell. I'm long, it's gotten to a point where I'm uncomfortable, I'm going to work a limit order a little higher on a bounce. Doesn't sometimes give you that balance. You're going to have to be a little bit more proactive in dealing with it, but lots of opportunity here where you're always a little bit more challenging right now. So good walkthrough. But let's bring up the slides because you've got some great context here.
I got some slides for you.
He's got some slides for us. Glenn always comes prepared.
If we can flip over to those slides. My friends, if we can tighten up the slides, that would be great. Thank you. Yeah, we've got an interesting week here, so wanted to bring up a topic that's close to all of our hearts. Why are central bank meetings important? And especially for traders that are engaged in stock market, mainly stocks or options. Central banks, the FOMC, can have some weight to it, but why does this matter for currency traders a lot more? And why do they watch central bank meetings outside of the U.S. And in other regions? First things first, monetary policy decisions. The U.S. central bank will meet 8 times a year to set the overnight federal funds rate, which we're seeing here on the right. That's really the headline of a lot of these meetings. Biggest talking points is Fed rate cuts, Fed rate hikes, and that has a direct impact on currencies because that is, at the flip of a switch, direct impact to the yields, the return for holding some of these currencies. And then at these meetings, they set a slew of other things like quantitative easing, tightening, and a lot more down the rabbit hole metrics to try and fulfill their dual mandate of keeping countries' monetary policy in order. But the quantitative easing piece, you tend to see when it's kind of out of proportion, like you'll look at the balance sheet of the Bank of Japan, and that's something where you can kind of directly tie. They don't have that under control, and that's a large part to the supply and demand, and a lot behind the Japanese yen weakening. But I know that doesn't interest you as much because all of this stuff pretty priced in. by the time we get to these meetings, because they can have such an impact on currency markets and across asset classes, a lot of central banks do their best to telegraph these moves. And that takes us to what else they talk about, their economic assessment and outlook. And this,
I see a hat, a very skinny snowman, Frank in a kimono,
Yep.
and then an alien.
read the tea leaves,
Yes.
because that is the best you can do when the Fed releases interest rate projections for the next 3 years. Who knows? Once you get to that longer run, what they'll actually be. But this is released at the same time as the meetings, an economic summary, and this is scrutinized immediately. Where is the trajectory looking? It's all forward-looking, and any traders or market participants do their best to try and get ahead of how that narrative is changing. And they'll release a 17-page document. You can read as much as you want, but it really is up
Please,
to the
God,
market.
don't read it.
As to what they pick is and what they deem is important. And moving on to the press conference, forward guidance. This in the U.S. and it's pretty standard across the world.
Right.
You'll get the meeting. You'll get the release of all the economic data they've put together, their statement, but then it'll be 30 minutes later they'll hold a press conference where they draw out some of this stuff is released, but then they'll take questions, and that's where you can kind of gauge if you hear hawkish or dovish. That kind of granularity can really move markets, as the whole game behind this is trying to predict where central banks will go next with their monetary policy decisions. But that just gets me to some of these takeaways for traders, and be curious to get your input on this. But really, you can read into a lot of this stuff as much as you'd like to, but there's opportunity no matter how in the weeds you get, just understanding what all the parts there is around these decisions. This Eurodollar graph from the December Fed meeting I think is really interesting,
Right.
because we're looking at the 15-minute candle here, and you can see right there at 2 o'clock.
4 euro. Yeah, that's
Yeah.
a long time ago.
And and so we had the snap announcement. We had a large move, outsized move to the downside. Then you have that 15 minutes between the initial reaction and the press conference, where you can see a little stabilization, and then the press conference really taking the pair to new lows. And so it really is just understanding, is there a surprise in this announcement? Where was everyone expecting this to be? Are there differences from that? And then longer term, you have the interest rate differentials play into this, where you'll see kind of more long-term moves like you've seen in the dollar yen, where you can expect this interest rate differential to be wide for a long period of time. So you get more institutional bets and money behind some of those carry trade strategies that can exacerbate a lot of these moves.
Absolutely.
How's that?
And it's a great walkthrough. And I think you hit on, if you like taking the watch apart, so to speak, this is great. You can dive into this. For a trader, those 16 pages they publish, the market will digest that and show you exactly in literally less than a second
Insane.
what the summary of that document said. I like to rely on the market versus reading the paper. Context is great. I think the dot plots show these guys have no clue. And it's a hard thing to do to guess
absolutely.
where a rate's going to be in 12 months. But for us, as traders, the takeaway is sometimes you don't know when the tweet's coming. And the tweet can either make you feel really good or really hurt, depending on your position. That's unknown. This is a known unknown, which means I know at 1 o'clock something's going to come
Right.
out. And at 1:30, they're going to come out and say something again. That's going to give me 2 windows of opportunity to start thinking about widening my expectations, because we know there can be, in this example, it's perfect, more elasticity. Don't try to guess what they're going to say, because if I've seen this happen so many times, if I handed you an envelope and said, this is what they're going to say, and you go, wow, that's really bearish. And I told you, you can trade this, but you can't close that position until the end of the day.
It's still
really hard. So
yeah.
You want to take from this is that, again, we've got Bank of Canada today.
Yep.
ECB tomorrow.
Yep.
Those are two inflection points where I'm going to widen out my levels of interest. I'm going to think about what I want to manage going into the meeting and if I still like my bias. And then I'm going to look for opportunities on both sides. And this is where you want to, again, Canada's had a good run. We know Euro's had a tremendous run. I want to think about if they really beat up Euro, where do I want to buy? And it's like, well, I don't want to buy until they get back to 104 because that's as cheap as they were. That's not a reasonable thing.
Right.
Within the range, what's an extreme you'd be interested in trading this level? So this is all great takeaways for us in terms of context, and you can dive as deep as you want, but the market's wonderfully efficient in telling you that.
It is.
And it's for us to take advantage of the fact that you're going to do your homework, pick your levels, get set. Now, probably 3 times out of 10, nothing really happens.
Exactly.
Right. You pull the orders out, you move on to trading. But when they do, you get an opportunity to either harvest some profits on a run or establish a position. The management piece is critical because you can have loss metrics that you're not going to be able to get at because the market's going to move quickly.
Right.
So it's being mindful that I'm going to have controllable size that may move a little bit further against me than I would have wished, and the ability to, like, if that size is small enough and it does move, you can make the decision like, okay, at this value point, I'm going to defend that with a little bit of cost basis reduction. All great stuff around context. Why these meetings are important, tradable opportunity at the end of the day.
You got it. And that'll do it for us today. Happy Wednesday and happy trading. Next up, we've got Tom, Tony, and Vanetta on Tasty Live. Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday, Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Wednesday to you both.
OMG, you guys look totes adorbs in your matching outfits. Hashtag couple goals. Hashtag fit check. Hashtag outfit of the day.
You so wanted to do that all morning. You've been sitting here very quietly before the show started, waiting to do that, didn't you?
I am jealous. Like, I always would want to, like, dress like my partner, but y'all know I can't keep a man.
We are not partners. We are not partners.
Oh, it's Hello Kitty.
Oh, Hello Kitty.
It's a Hello Kitty branded dress, yes.
Oh, got it.
But why are you and Bat dressed alike today?
Well, it wasn't planned.
Really?
We're probably down to, Wednesday's laundry day. I don't know about him.
I just get lucky this way. It really is uncanny. The other day, I don't have any shirts with hoods on.
I only have one of these shirts.
Yeah.
I only have one.
I mean, yeah, but in 40